What is up? Welcome back to another video. In this video, I'm going to be talking about the Silver Bullet strategy, but most importantly, I'm going to be talking about how you find your exits using liquidity. Because I've had a lot of people ask me, they are fine with the Silver Bullet strategy, but they are just unsure where to target their profits. So in the first half of this video, I'll be going over a Silver Bullet trade example, and then I will be telling you guys where to put your take profits whilst you are trading the Silver Bullet strategy. So, first of all, if you are unfamiliar with the Silver Bullet trading strategy, I'll quickly go over it. All it is that you need to be targeting opposing liquidity. So that is the first step. So what this means is you need to be make sure that you're targeting the opposing liquidity. So if we are in a downtrend, the Silver Bullet is going to be long, and if we are in a small uptrend, the Silver Bullet will be a short. And the second step is you want to wait for displacement. Wait for displacement. The third step is you want to enter off of a fair value gap. So you wait for a fair value gap to be created for entry. So they're the very simple steps that you need to have, and also the time, of course, is 2 till 3. Is 10 to 11 a.m. New York time. So that's UTC -5. That is the main steps that you need to follow when trading the ICT Silver Bullet. If you're not trading these steps, then that is not the Silver Bullet that you're trading. So let's jump straight into it with a live example. So first thing that we are going to do is mark out the chart times. So as you can see, our macro starts at 10 a.m. but we actually mark out from 9:50 a.m. as that is when the actual macro starts. It's 9:50 till 11 a.m. So if we just mark out that till 11 a.m. so this is our 10 a.m. to 11 a.m. New York macro. Then in this specific example, we will be looking for lungs, because as you can see, we have this small downtrend, but price takes some buy side liquidity, but overall we are in a big downtrend. Therefore, my overall target would be buy side liquidity, just because higher time frame, more bullish than bearish right now in this situation. And also we have this small retracement. We've had this small down move here, but as you can see, we have not had any really good entries. We've had a fair value gap being created, but we've had no opportunity to take shorts to the downside, and we then take sell side liquidity right here and get a nice rejection from it. Therefore our Silver Bullet would be right here. This would be the fair value gap that we enter the Silver Bullet from. So we would put our entry right here. Our stop loss would be at this low, and then our take profit would be this buy side liquidity right here. Buy side liquidity. So that is the Silver Bullet trade. Now, as I said at the start of the video, we are going to be talking about where you're going to put your take profits and why you put your take profits in certain positions. So in this specific trade example, in my opinion, it is very clear that this is buy side liquidity, because this is a an external swing high. So what I mean by that is, if we delete everything on the chart, as you can see, if I just use a replay mode and go to this point here, as you can see, if we're marking out a chart and we're marking sell side liquidity and buy side liquidity, right now we have this main buy side liquidity, and the reason that this is buy side liquidity is just because it is a very swing the top of the swing high. It is a very clear swing high. We also have liquidity here. Now with this buy side liquidity, what you could do, if we got, as because we got our entry down here, and if we enter a position here like we did, then this is already 50 points. This silver bullet is already 50 points to the buy side. So you could take partials here or take some of your profits off there, and then your main target would be this top buy side right up there. So that is what a lot of people like to do, and the reason why some people like to take profits here, which I like to do as well, is one, because it's already a big move and then you just lock in some guaranteed profits, but also it is the end of a leg where lots of fair value gaps are. So what price action could do is price action could want to come up to this point here. Let me just get my tool out. Price could come up to this point here, take this buy side liquidity, react off one of these fair value gaps, or react off a bearish order block, because if price was bearish right here, this would be the point where we're most likely going to return from. It is a bearish breaker block. Yeah, just lots of reasons why price could return from this point right here. So if price did reach the buy side liquidity, then that is a very good point to have your take profits, and then you would put your stop loss to break even, so you're not risking anything anymore, and then your main target would be right up there. Yep, I hope that makes sense. And the way that you would manage this position is, if this was me personally, I would take off, let's say, 80 to 75 to 80% of my position right there. Then I would leave the rest as a runner, and yeah, I would just target this main buy side liquidity. And what you could also do, if you are very strong about a specific bias, is put your take profits even higher. Let's say you took 80% off here, and then as soon as you take partials, what you always want to do is move your stop loss to break even. So let's say I took partials right here, my stop loss is at break even now, so if price action comes down to here, I don't lose or make any money. But then let's say I could target this, for example, because any money that is made there is all extra. And the reason this is just a higher time frame fair value gap. That's the reason why that is red box is there. And yeah, as you can see, this play worked out very nice, and if you are familiar with my videos, you will also notice that there is a perfect inversion model trade right there. That yeah, was a very nice catch. So yeah, in this video, I was just wanted to show you a quick example on where you could likely put your take profits. And in this example, I just used the internal swing highs, as that is a very good draw. And I've also taught you how to manage your risk positions.